everybody. Hello. Happy Thursday. Equity is back. We are going to do our usual rundown of the script, and I'm just going to tease something first, though. We are going to try some neat live graphical things. So if you're on the Hopin with us, not the Twitter space, you're going to be able to see, hopefully, some graphics come up. And if it goes well, I get the credit. And if it goes poorly, it's Julio's fault. Julio is one of the fine people behind the scenes who make all this happen. No, I kid, but we're going to try some fun stuff because we can. But Marianne, Grace, I'm going to shut up and let Grace do the pre-show.
Yeah, I'm excited to see what other graphical things we can do now that we have this incredible tool. I feel like we get fancier and fancier. We had sound effects, and the sound effects like blew everyone's mind. And then we have graphic.
That's right. The sound effect. I almost forgot about it.
I know. Lest we forget those and forget to do it again, because that was very fun.
That was fun.
Cool. So I'm just going to talk through the show really quick and make sure that we are all set. We're going to do our live intro. So just a reminder, when that happens, I'll have us all take a deep breath. I'll count us in. Then I will go off screen. Alex, you will then be on screen at that point, and we'll do our intro and take us off into the show.
Yes, most excellent.
We have a fun new little section, just like our fun new little section last time of the roundup of news that we had covered in the past and needed an update on. We're going to do a very brief today in Twitter, which I wonder how long this section will continue to be a section. Today in Twitter, just to update people on latest stock numbers, earnings, anything that has advanced the story past what we have talked about before. After that, we're going to get into our deals of the week.
Yep.
Marianne, you're going to lead describing Umaro, and then Alex, you'll ask questions to pick apart what that company is all about, why it's exciting. Same thing with Pony AI. Alex, you can give us a brief description at the top. This is why this is really exciting and cool. Marianne, you can ask some questions to pick that company apart a little bit and figure out what's really going on there. And then we're going to get into our first theme, which is actually a very big sort of two-part theme, Robinhood layoffs, and then Blend layoffs, and both of those different sets of layoffs speaking to the larger trend here, which the piece at the end, pandemic-fueled companies are finding a way, are finding the new reality hard to swallow. We can unpack that piece a little bit, Alex, and hear some of those larger trends.
Okay, that sounds good.
Robinhood is our transition there into teens using crypto to invest, which I'm just so excited to hear all of what that means. In a couple of different ways. And then also we can widen the conversation there to talk about larger adoption with the Fidelity news, also offering crypto in retirement accounts. So starts with teens, gets us into a larger conversation about general adoption. And that's where we're going to wrap. I see your note here, Alex, to not forget the plug for Chain Reaction. That's amazing. Any question?
That's just me being a moron.
No, that's
just
good.
Defense.
That's super important. I do the same thing. I live myself like 10 notes in all the places that I would possibly look for notes. Yeah.
The interchange is launching this weekend. Maybe we can.
Oh, that's a great
same
idea.
Time.
Let's do that up top.
You think? Okay.
Yeah.
I'm gonna put a little note.
Yeah. Let's do that up top. Marianne, you are the most important, and therefore you shall go to the top. Seems reasonable to me.
I'm very excited about it, Marianne.
Yeah.
Thank you.
Can I, we haven't started yet, so I can just say this. Like, Marianne did a tweet announcing her newsletter saying, hey, sign up's coming out this weekend. And I retweeted it just because, hashtag team. I've gotten like 20 tweets from people that are like, oh my gosh, we're so excited. We're signing up right now. When I launched my newsletter, there was not that many people showing up for it. So Marianne has a fan club that's bigger than I knew. I should have guessed, but
thank you. And sorry that you're getting bombarded with since you were tagged, but
I don't mind at all. Bring it on. I'll take anytime someone wants to gas you up, I will be I don't have a way to complete that analogy, but at the pump, whatever the right way to end that one is, I'm here for it, is what I'm saying.
Thank you. Thanks for the support.
Cool. Well, if there aren't any questions, are y'all ready to get started? Did anything come up on the script before we start?
No, I'm ready.
No, I feel good. I'm excited to talk about the bacon thing more than anything else.
Cool. I'm psyched about this show. I think there's some really good stuff.
Yeah.
So let's have a little fun.
Yeah, let's do it.
Let's go.
Everyone is recording.
Yep.
Okay. Cool. We're going to take a deep breath in and out. We're going to do a show. Oh, and questions at the end.
Yes, questions at the end.
Yes.
I'm going to make a note so I don't just hang up. Bye, everybody.
And
we're out of here. All right, let's do it.
In 3, 2, 1.
Hello and welcome back to Equity, a podcast about the business of startups where we unpack the numbers and the nuance behind the headlines. My name is Alex Wilhelm, and I am joined today on this live show with my dear friend, Marianne Azevedo. Marianne, hello. How is Austin? And I hear breakfast tacos are under attack.
Oh, yes. Everything is great. I'm excited to be here. We have lots of fun stuff to talk about today.
Yeah. A small note, Natasha is not with us because she had a death in the family earlier this week, as she said on Twitter. So she is taking some time to step back and process through that. And we love her and we will have her back as soon as she is ready. But Marianne and I are going to be at the helm today. Quite a lot to talk about. We're going to do a brief, like 2 or 3 minutes tops, overview about the latest in the Twitter Elon saga, because it is the biggest de facto story in technology today. We're going to talk about 2 deals for startups, Umaro and then Pony AI, very different parts of the world, different focuses, but both very interesting. Then we're going to talk a little bit about the Q1 pandemic update. And by that, we mean layoffs at certain companies and how they tie together to give us a better perspective about what is going on today in the world. And then crypto for all ages. And should teens be buying Bitcoin? And then we'll wrap with a couple notes about how you can now put Bitcoin into your Fidelity 401k. I've been getting questions from friends about that. So I have many opinions. Whew. But Marianne, before we actually start the formal news rundown, you, my dear friend, have an announcement. So tell people about your newsletter and where they can get it.
Yeah, I'm so excited. So for the past 3 months, I've been writing a column that's been called Fintech Roundup. It's published every Sunday, but this Sunday it will formally launch as a newsletter that will hit inboxes. And it's called The Interchange, which Alex helped me come up with. I'm so grateful because it took forever to come up with a name that I actually really felt pumped about. So please sign up, techcrunch.com. I think it's /newsletters.
Yep.
Yeah.
Yeah, it's going to be great. I've been reading the post version of this for some time, and Marianne is my absolute filter and lens for all things fintech. So if you want to learn more about how money is being moved around by bits and bytes, well, it's for you. Okay, let's go ahead and do our Twitter story. So Marianne, we've been talking about the Twitter Elon saga for a couple of weeks now. Just catching everyone up just a little bit. The deal was essentially accepted in an informal capacity over the weekend. There still needs to be a vote and so forth. But Marianne, the drama did not die away once that happened. So I want to start by talking about some terms of the deal and how how Elon's misbehaving. So can you take us through what's going on?
Yeah. So, I mean, one of the things that is kind of curious about what's happening is Elon's effectively offered to pay $43 billion for this company. One of the conditions of the deal, according to the formal language, is that the equity investors shall be permitted to issue tweets about the merger or the transactions contemplated hereby, so long as such tweets do not disparage the company or any of its representatives. Fairly straightforward, right?
Super straightforward.
Right. Yet he's still doing it.
Yes.
So, not that we're really surprised by this, but still, it's like it just strikes me as like a really kind of immature and unprofessional direction to take.
Very immature, very unprofessional, calling out executives at the company that you're taking over to engender essentially a pile-on by trolls is a poor use of influence. I think if I saw one of my friends doing that, I would call them and say, "Hey, why are you being such an ass?" Yeah. Right. And so to see someone with this amount of financial power do it is lame. And also it's a power imbalance that I find to be a little bit gross, but also like it's against the language. Like the agreement says won't do this and then just does this. And
right.
I'm not going to say that I'm the biggest fan of regulation, and I'm not going to say that I'm opposed to all rule breaking, but this does seem to be slightly egregious and in poor taste. And it's actually led to some commentary, Marianne, that maybe he won't try to follow through with the deal. I don't really buy that, given the work he's done to kind of get here, but people are saying that. How much stock do you give that?
I really don't know what to think anymore. I mean, part of me thinks he is very serious about it because he really just wants to control the, the platform.
Yeah.
So, but at the same time, it's like he just can't help himself. He has to insult one of the top policy executives. And he's very vocal on Twitter about his issues with the platform. So some might say that's him justifying his reason for wanting to take it over. Others might just say, grow up.
Yeah. And the lack of maturity on Musk's side doesn't bode well for a very important issue for the company. Twitter dropped earnings this morning, and they outlined it's kind of mixed results, I want to say. There were some issues with historical user reporting. There was some revenue growth. You can kind of look through the numbers yourself. But what really stood out to me was the fact that Twitter really is an advertising business still. Its other revenue streams are pretty modest. So just pulling from the data, in Q1, ad revenue at Twitter was 1.11 billion and subscription revenue was 94 million. So
wow, that's like the vast majority of revenue.
Yes. And what advertisers love is a stable place that is non-controversial where they can deploy money to build brand equity. And Elon, by discussing removing perhaps some of the content controls that keeps out some of the toxicity on Twitter and also behaving like this, probably doesn't engender a lot of confidence by advertisers that this is a place they should be investing their money. And Twitter's already moving to kind of head this off to protect itself. But I mean, I'm curious to see how Tesla style management will mesh with a social media company, which is a different beast.
Yeah, it's really fascinating. And it's part of me is still kind of like shocked that we're even like writing about this is happening. And Twitter, as you mentioned, their revenues were 1.2 billion. It's up 16% compared to the same quarter a year ago. However, the revenue performance fell short of analysts' expectations.
Yes, Twitter has been on this long push to double its revenue and boost its user base, having a middling earnings report, having to restate some user numbers, not great. And I'll leave us with one more thing, Mary, before we move on. People were saying that maybe they accepted the offer to sell Twitter because they were going to have a disastrous Q1 report. Not really. Turns out this is not, I mean, it's not stellar, but It's not a catastrophe. It's not like a flop. So that hypothesis has kind of fallen by the wayside. And just because this issue and this saga are not done, I presume something silly will happen over the weekend and we'll talk about it some more. I'm a little tired of it. I'm a little bored of it. I don't know how everyone else feels, but
same. But stock, just before we end this, is at 49.49. Currently up slightly, but still significantly lower than the 52-week high, which, if I recall correctly, was about 73.
Yeah. Elon's offering a lot less than that for the company. Essentially, the argument is that Twitter, like many tech companies, reached a valuation point kind of in late 2021 that was perhaps exuberant. And so later on, its declines perhaps more realistic. And so Elon is paying a premium. I have various opinions about this, but we don't need to get into the numbers. They said yes, so it doesn't matter how the proposal was done, even if we find it to be, say, tacky. All right, let's move on to a couple of startups. The first one is Umaro, which is, I was excited by this one, Marianne. So tell people, one, why we care, and two, how they're going about making this bacon equivalent.
Okay, so Umaro is a startup that Brian Heater covered, who, by the way, is extremely talented reporter for TechCrunch. And why we thought this was so fascinating is this company essentially wants to take seaweed and make it a viable protein source, but in different forms, not just like eating seaweed, but like turning it into bacon, which, if you see the picture at the top of the story, I mean, I was blown away.
It actually looks enticing. It looks pretty good.
It looks like bacon. I would not know that it was seaweed, but apparently seaweed is this fantastic protein source. Sorry, I have a frog in my throat.
Why don't you drink something?
I'm okay now. Okay. So the co-founder, she says seaweeds can produce more protein per unit area versus conventional crops with no fresh water, no synthetic fertilizer. So it's good for the environment. So that's another big plus. And basically they're wanting to outcompete soy on price and volume and match or exceed its quality, including taste and functionality. So this is pretty fascinating.
I kept waiting for the catch in all of this. I'm like, okay, so it's more efficient to farm. It's got a complete protein. They think they can scale it. It's gonna be better than soy. And there was no real downside. The only thing that I could find in our coverage of this that made me sit a little bit askance, if you will, was that there might be in the bacon some sort of like background hint of seaweed.
Right. And Brian, he did address that. He said he had not yet tested the bacon, that he was told by the co-founder that there's like, well, of course, this is what she said. The seaweed taste is subtle. And, you may or may not feel it there. I personally hate seaweed. So if I could tell there was any seaweed in it, I would not eat this. So I really think until one of us tries it, I'm going to remain a little bit skeptical.
Okay. Yes to all of that, but we can get used to things. So whenever I buy oat milk, I just kind of buy whatever's available, and I have a list of favorites, but often the one that I want will be out. So I have to pick a different oat milk. And there's this one that I currently have. I forget if it's Planet Oat or Oatly or one of the other brands. It tastes a little bit like grass. It's the only one that's like this, and it's not a good flavor. Mm-hmm. But when I want to have cereal in the morning and I only have this oat milk, I just kind of, go through it. And I've already kind of like lost the annoyance with that slight differential in the flavor profile, because I want to have a liquid in my cereal. And so to me, like, I think I'm willing to meet this bacon halfway or more, just because I know how bad porcine production is for the environment, having been in 4-H as a kid.
But I still want to try it. I'm curious.
Yeah. Umaro, if you hear this, let us know where we can buy some so we can test it out. We'll even do a live taste test. That'd be hilarious.
Yeah. And I forgot to mention, it has raised money. It's raised like several $1 million to try to scale this. So looks like others believe in it as well.
Yeah. Last thing on this, Marianne, when we think about meat alternatives or alt proteins, whatever you want to call them, are you more on the side of lab grown meat being the future, or are you more on the side of what Umaro is doing, which is like, we're going to take a plant and abuse it until it looks like meat?
I mean, I'm probably more for the plant, but just because I feel like it's coming from real food, something that already existed. So I think I'd lean toward that. And by the way, I love oat milk and I have it every day, and I use Moala. So
thank you.
Yeah. Anyway, but yeah, I would lean toward the plant based.
All right. I think we're all going to end up being vegans some point in time, and I'm not. Now we're just zooming in on the bacon. Yeah.
Oh, there it is.
Ladies and gentlemen, if you were on the Twitter space, what you were missing out on is our dear friend Julio zooming in on bacon. That actually doesn't look better the more you zoom in. Now that we're doing this. In fact, it turns out if you zoom in on bacon that's made out of seaweed, it looks slightly, there we go, rubbery. Anyways, let's move on to my favorite topic, which is self-driving cars.
Oh, yeah.
Do you remember when like Uber and Lyft and everyone were all bashing their heads in to hire all the engineers because everyone thought this technology was going to come out in like 18 months?
Right.
Yep. Well, it turns out that didn't happen.
That was like what, 5 years ago?
Yes, that was 5 years ago. Sadly, self-driving cars are always about 5 years away, no matter what time you look. But there is modest incremental progress, which gives me hope that we are eventually going to have self-driving cars before we figure out how to have net energy positive fusion reactions. So yay. The latest news is that Pony.ai, a Chinese autonomous driving mega unicorn, if you will, has gotten a license for autonomous vehicles in Guangzhou in China without being partnered with a taxi company. So there have been some pilots in other Chinese cities in certain restricted setups, if you will, but they've always been partnered with other companies. So what Pony.ai has is kind of independence in this major city, which is in the techish region of China, if I'm holding up my geography correctly. And it's a step, Marianne. It's another incremental step towards a future in which we can get into a car and sit in the back and the car drives us to the cafe.
I'm still not on board with it. It's going to take a while. You and I have argued about this for years.
You live in Austin. It's flat. You should be the biggest advocate.
I can't trust. I just don't feel like I can trust these autonomous vehicles. And Pony.ai is starting out with humans, by the way. It's like, it's kind of easing its way into this.
Well, I think because they're being forced to, but I mean, like, I think you can get into a Waymo car in, is Phoenix? I think it's Phoenix, without a human driver. So we're starting I think people thought we were going to show up and conquer this space and have it. I think instead we're going to kind of nibble in from the edges slowly until we've consumed the issues one by one. But Marianne, we're going to talk about teenagers later on the show because they come up in a product sense. But now that you and I are no longer 16, what's your opinion on 16-year-olds being given the ability to drive a multi-ton car at high speeds on highways?
Okay, well, I'm about to have this,
I know.
happen in our household. It's terrifying.
Right. So would you rather have your children out there in an Escalade that weighs 80 billion pounds or being driven around by Pony.ai or Waymo?
That's a very, very, very tough question, Alex. I mean, I don't know. I'm still just not on board with self-driving autonomous vehicles. It all still scares me. Like, technology is amazing, but I cannot imagine being in a car and just trusting it to like do everything and do it safely.
Are you a good driver?
I actually am a damn good driver.
Yeah.
I
Okay.
had a major lead foot though when I was younger, but then kids sort of stopped that.
Okay. So much like my spouse, you're a very good driver. Do you have a good sense of direction?
That's what GPS is for.
Okay. Fair enough.
Okay.
As a distracted, blind, lost person, driving around the city I'm not good at it. My spouse is. We live in the city she was born in. She's super detail oriented. She's very, focused. And so for her, driving's great. And she does all of our driving, all of it. She can parallel park. I can't. And so for me, I'm like, self-driving cars is a safer way for me to get around versus for you. I think you're coming from a much higher place of confidence. And so it's probably like, why would I give up versus for me, it's why would I gain or why can't I gain? So,
right. But I think no matter what, I feel like this is eventually, going to happen. I better get used to the idea. And at some point it's going to just be commonplace.
Yeah. I mean, we used to not let women drive cars. Right. And then we invented automatic transmissions so that way women could figure it out. I mean, like we used to be super awful about who got to drive cars. Now I just think the next step is going to be remove everybody. But all right. By the way, if I butchered the history on the sexism of the audio industry, I'm sorry. I was recalling two facts in the back of my head, and when they came out, I wasn't quite sure. I
got what you meant.
Yes, I was trying to be positive, and it came out mishy. All right, let's talk about some bad news, Marianne. Yeah. Last year, we spent so much time covering the rise of consumer fintech, the savings and investing boom, the never-ending saga of how everyone was buying and selling stocks and crypto and so forth. Robinhood was part of that story. Robinhood went up, they went public, and then what happened?
Yeah, well, things went downhill, and they've just kept going downhill. It feels like, right? I think 2021 started out with the GameStop saga. Did it not? Wasn't that feels like a long time ago?
That's right. Yeah.
Yeah, but so actually, Robinhood only went public last July.
Yep.
It wasn't that long ago.
No.
Yeah. Right now it's trading at what, about $10 a share?
Yeah.
Yeah.
Went public at 38, I think.
38.
And then went up to 85 at some point in time and has since lost, 7/8 of its value. And then that leads us to the latest news story, which is that they're going to be laying off a chunk of their staff.
Yeah, 9% to be exact. And I think how many people does that amount to? About 300?
Yeah, that's our math. I think they have about 3,400 employees. So just under 10% of that, about 300 people. I mean, it's quite a lot of folks. It's not an amputation. It's slightly more than a haircut is my kind of like my read of this, but probably customer support. If they have lower trading volumes, you're going to let some staff go. But what a step down from the company. And I mean, a year ago, this was one of the hottest startups and unicorns in the market, really bar none, I think. Yeah,
it was. I think though, Robinhood for a while has been getting a lot of kind of negative publicity too, though, where there's been a lot of accusations of not being responsible and like letting people just get on there and start trading because they make money, right, off of all the trades. And so there's been accusations of the company not doing it responsibly enough. I think I one time covered a class action suit by people who were really pissed off because they claimed they were not informed of things that they should have known and lost money.
Yeah.
So I don't know. Like I think Robinhood may have good intentions. I'm not 100% sure what's like all behind this decline. I know that they did have like hyper growth, like the pandemic lockdowns, low interest rates, and fiscal stimulus that was happening. And now like all of that's not here anymore. Like people aren't really locked down, interest rates are rising, so it finds itself like many other companies that kind of boomed during the pandemic in a difficult spot.
Yeah. And I think the issue that I have here is that it didn't generate a lot of material long-term value. I mean, like the company really grew. If you're on the hop and you can see this, if you're not, Julio just threw up a chart of the trading history of Robinhood. And it's kind of a horror film. If you look at it and just kind of go from left to right as time passes, it's been a complete mess for the company. And I think it goes to show that there was a mistake in the market that private investors and private entrepreneurs made, in which they expected and began to treat consumer fintech trading revenues as if they were essentially equivalent to software as a service or kind of modern software incomes. SaaS revenues are durable and tend to expand over time. Consumer fintech trading revenues are high margin and lovely, but they don't have that same durability and they don't have the same expansion built into them as SaaS does. And so I think what we just had was a misclassification or a misvaluation based on a misclassification of what Robinhood is. And this impacts, Coinbase and eToro and Acorns and Dave and on and on and on and on and on. But it turns out that, these companies just aren't worth what people thought they were. It's now cheaper than it was as a private company. Shockingly enough.
Right. And like a lot of companies, they hired a lot over the past like couple of years. I think they admitted to growing their headcount almost 6 times, from 700 to nearly 3,800 over like from 2019 to 2021. Reminds me a little bit of Better, which like went crazy over hiring. Just being short-sighted a little bit, thinking this pandemic was going to last forever or something, and it didn't. And anyway, so it's not, when you look at this and you realize just how, that's 3,100 people that they hired in a couple of years. It's not shocking there were some layoffs. Do feel bad for the people affected, of course. It's not the only company that's laid off, of course, as we've talked about. Better.com last week had a layoff of an estimated, 1,200 or so more people. And another company in the digital mortgage space, Blend, had a layoff last week of about, it was 200 people, or 10% of its workforce.
Which, so I hadn't heard of Blend. Blend is a publicly traded kind of mortgage processing company. Fair enough to say?
Well, like they power like the banks like Wells Fargo, for example, their applications to actually like conduct the mortgages online. So like, they're trying to help these banks make it be more up to date with technology. So if you get a mortgage through Wells Fargo, it'll be powered by Blend, for example. Okay. So you're doing more things online thanks to Blend.
Okay, I wanted to clarify that, because in the case of Better.com, we saw a company scale rapidly on the back of mortgage and refinancing volume. And it sounds like Blend also scaled in the same way. And then both of them had been kind of like sideswiped by rising interest rates. And I think you make a pretty good point. Did they think that the set of conditions that they were raised in, if you will, would last forever? And if they didn't think that, how did they get so far off base? And if they didn't think that, how could they have not? So I'm mad either way.
I'm not sure. I have interviewed the CEO, Nima. I'm sorry, more than once. Very smart guy. I think the company have had a lot of potential. I'm pretty surprised at its financials, though. It's never been profitable. Went public. Was it last year that it went public?
I think so. I can double check that, but in there.
Yeah, went public. Lost $169 million last year. Doubled their net loss. Doubled the net loss. And they're actually expecting revenue to decline by 31% this year. So that doesn't look very good for the company.
It doesn't look very good, but it's also not uniquely in that situation. So Coinbase and Robinhood are either expected to report flat year over year or slightly down revenue results, if I'm recalling all the numbers correctly. So to see Blend struggle, as Better.com has struggled and so forth, we're seeing companies that did ride the pandemic up now suffer from either retreat or at a minimum indigestion as the unique conditions that fueled their rise end up actually going away. And so the way that we've been talking about this internally is it shows that there was a demand pull forward as opposed to a demand like aggregate demand growth demand growth for a longer period of time. I'm butchering that, but you know what I mean.
Yeah, I know what you mean. Instacart is another example, right?
Yes.
That like had a boom and is sort of hopping.
Netflix.
Yeah. So this is a pretty widespread phenomenon, and I don't know why we're all a little bit shocked by it. I mean, we should have seen it coming, and quite frankly, I think we kind of did here on Equity. We certainly talked more than once about how all these highs were not sustainable. At some point, things were going to have to come down to earth, and it feels like though it came like it was a quick drop rather than like this slow, gradual ride.
So two things. One, Equity is not financial advice. Just throwing that out there as a general boilerplate.
Yeah, of course not.
Yeah, we don't trade. We own index funds for a reason. And two, Marianne, have you read The Sun Also Rises?
I don't remember, honestly.
Okay, it's I don't know. There's a quote in there. A guy says, "How did you go bankrupt?" And he said, "Slowly, then all at once." And I feel like that applies pretty closely here, because if you go back to our coverage in December, we're like, wow, tech stocks are getting hammered. And then January, we're like, wow, they're really getting hit. And then now we're like, well, so it's slowly, and then it becomes clear.
Yep.
Yeah.
It's exactly.
You mentioned how at Robinhood there was concerns about, teens using it and possibly people getting access to financial products that were maybe a little bit advanced or esoteric for their age or sophistication. In the case of Robinhood, they made way more money per trade off of options than they did off of stocks. And so there was a tension, if you will, between what they were trying to protect users from and what they wanted them to do. And that work to protect teens is actually, it turns out, a pretty big business in the fintech world. There's a couple of companies, including Copper and Step, that are aimed at teens essentially, and they're taking different paths on the crypto question.
Right. So I wrote about this week, Copper, which started out as like a digital bank aimed at the teens demographic.
Yeah.
I wrote about them last year. They'd raised a few $1 million. And then they came back to me and they're like, hey, we raised again. It was a preemptive round. They weren't necessarily looking to raise, but before we get into its teen focus in crypto, I have to very quickly share how this preemptive round came about, because I think it's interesting. Fiat Ventures led the round. So Fiat Ventures is an arm of an agency, kind of like a marketing growth agency aimed at like fintechs, insurtechs, called Fiat Growth. And it was started by an ex-Chime person, Alex Harris, if I remember his name correctly.
Okay.
All right. So then, apparently Copper was using Fiat Growth's services. Fiat Growth was like, damn, this company's growing a lot. And so through its venture arm, it decided to lead this investment, which was a $29 million round. And impressively, Copper said it's grown to over 800,000 users in less than a year. It has a real grassroots approach to recruitment, like it goes to high schools and things like that, kind of the offline method we've talked about more than once, that it feels like more companies are adopting to attract users. It seems to be working for them. So it's not there. They've also announced that they're planning to move into not just being a digital bank, but allowing teens to invest in stocks, mutual funds, and crypto. So that's what they're moving into. Step is another startup that Anita Ramaswamy, who is amazing, she wrote very recently, and I'll let you say the subhead if you'd like, Alex, because you had so much fun with it earlier.
So Anita wrote a great subhead, which read, "Silly skeptics, crypto is for kids," which, if you don't know, is a flip on an old commercial for a particularly sugary cereal called Trix. And there was a rabbit who was always trying to steal the tricks from the kids, and they would always say, "Silly rabbit, tricks are for kids." Right. If you didn't grow up in the 90s, that probably doesn't mean a lot to you, but to me, it's hilarious. So back to you. Yeah,
it was clever, I thought. So Step very recently announced that it was also offering a product for investing in equities and crypto on its app. It's going to be called Step Investing. So it is interesting, that like so many fintechs are now allowing for people to invest in crypto. And especially it seems to be very popular in this teen space. And one of the things, and this is where we tie back into Robinhood, is that the Copper CEO very directly stated that he felt like what Copper's doing is giving teens a place to invest in crypto safely and with more parental control and with some actual like education and guidance. Whereas on Robinhood, they may be doing it like under their parents' accounts, just kind of randomly. So they kind of, they really did just sort of slam Robinhood and say, look, we're giving teens a way to invest in crypto, but more responsibly than say Robinhood. Parents can see what they're doing. They can set controls, and they're hoping to be first to market. So we'll see how this race goes.
It's not very punk rock to let teens buy crypto, but only with their parents say so, because that's going to limit the market, is my read. Like, can you imagine going to your parent, let's say like you're 15 and your parents are, I don't know, 50, and you're like, hey, I want to put my allowance into Bitcoin. I mean, they're going to be like, what's that? Maybe. I mean, so is this a way to like clamp down, or what's the play here?
I mean, I don't think so. I mean, I can kind of see this. You know, my son is a teenager. He's been into crypto for over a year and knows probably more about it than I do. So if he came to me and said, you know, I want to invest in crypto, I want you to be a part of it, like, I would support it.
Your son, though, is very lucky to have, as a parent, the best known fintech reporter that I know. So yes, I'm sure you would. Yeah. But I mean, I'm thinking about like people in
the average
Oklahoma.
Person. No, you're right. You're right. I've had friends and family who actually text him for advice on crypto stuff. So to your point, the average person, especially like in the middle age bracket, is not, they're not super crypto savvy. So that is a good point. But again, Copper claims and says that it like is offering education. It's not just letting them blindly invest. And that's where it feel like it differentiates itself from, say, Robinhood, which
I'm fine with this. This is fine. I've been really just stalling because I'm trying to make a smells like teen something joke, and I can't figure out what the words be. Like leverage losses. I don't know. Smells like teen bankruptcy. There you go. Figured it out. Copper recently raised, I think, a $29 million round, and Step put together a $100 million Series C, which I bring up because Steph Curry put some money into that Series C. And last night, the Warriors sent the Nuggets out of the playoffs because the Nuggets are trash and the Warriors are amazing.
Again? So, yeah. Wow.
Yeah. The Warriors are amazing. I did fall asleep before the fourth quarter because I had work this morning, but I tried really hard. Let's talk about chain reaction really quick, Fidelity, and then Bounce, because we're a little bit short on time. But our friends Anita Ramaswamy and Lucas Matney, and also I think Jacqueline Melinek, have a podcast out called Chain Reaction. It's kind of like, it's the sister show to Equity. It's all about crypto. So if you feel like we don't talk enough about crypto and equity, you can go check that out. They have a new episode out, I think Thursday of every week. And frankly, I'm pretty excited about this one because I am constantly having to learn more about the decentralized economy, Marianne. And so another source is good.
It's quite complex. And Lucas and Anita are super smart and fun to listen to. So check it out.
Yeah. Now, just to close off our little story today, Fidelity is going to offer crypto in retirement accounts this year. So now, Marianne, instead of putting your 401k into a target date fund or an index fund or a mutual fund or a basket of stocks that you pick, you can put it into Bitcoin. And my question to you is, what portion of your 401k would you put into Bitcoin if you weren't beholden to journalism rules?
Yeah. I mean, I don't know, Alex. Like, I think, this is proof of just how mainstream crypto has become, you know, and it's come a long way in the past few years. So this was a huge deal. I mean, Fidelity is like one of the top retirement, you know, providers in the country. And now that it's allowing this, it's a big win for the crypto space, I think. I don't know how much I would contribute in Bitcoin to my 401k. And I'm very interested and curious to see how much others do.
I am curious. Julio, can we get a time chart up of Bitcoin's price over the last 2 years, say? That would be lovely, so I can make a point. Anita had another great headline about this. She wrote that having some crypto in your 401k is neither irrational nor exuberant, kind of like flipping the old Alan Greenspan quote from the dot-com boom in the 90s that there was irrational exuberance in the market. I'm of two minds about this. Like, if I wasn't a journalist and I did have, you know, complete flexibility in what I could invest in, I think I would put like maybe 1 or 2% of my 401k into crypto as like a back pocket thing, you know, like, you know, big funds, family offices, universities have like an allocation for exotics, which is where VCs get their money from LPs and so forth. Thank you, Julio. So as you can see here on the screen now, the price of Bitcoin has been pretty stable for a bit. Yeah. It's been bouncing around the kind of like 40 to 60 range for some time after a boom in kind of the early 2021, late 2020 time period. So, you know, it hasn't lost all of its value recently. So maybe it's sufficiently stable as to be an asset to, I'm struggling here. I'm trying.
I don't know. It's been historically very volatile. So like, that's one of the reasons I think people might be hesitant to long-term invest in it. I'd say you're right. Recently, it's kind of leveled off. It hasn't been as up and down as we've seen over the past few years. I don't know if that's going to continue. We don't know, but I kind of agree with you. Like, it doesn't hurt to have a little bit of skin in the game. You never know what's going to happen. So I don't think it would be outrageous to dedicate a small portion of your portfolio. Like I said, I'm curious to see as to like what percentage people would actually want going into Bitcoin and how that's going to play out over time.
Yeah. I'll just say this. I've been saying Bitcoin, but I really mean
cryptocurrency
versus
generally
a single, particular chain or token. And if I was picking, I think I'd do ETH over Bitcoin, just because Bitcoin feels kind of like the horse and buggy of crypto versus like a Model T, if you will.
Right.
And now that we've not pissed anyone off with that comment, we can wrap up. Marianne, as always, an absolute pleasure. Equity is live here every other week. We will be back in 2 weeks, which should be a good time. And we will have Natasha with us back next week. So the whole crew shall be reformed. But Marianne, you and I, it's always good to have an excuse to chat, just the pair of us.
Of course. Always so much fun. Thank you.
All right. And we can stop. That's the worst outro ever. And we're done.
What about questions? It's hard because we're like not really done,
Yeah, we're fake done. Can I find some way to not sound accidentally sexist when describing the historical progression of transmissions in cars?
Mm-hmm. Yeah, we can go back and do a little re-record there if you'd like. I mean, like, I understand the point, and also there can be helpful clarification or like maybe it's just the framing of your point that would help the listener hear that. Yeah.
Well, we'll play it back and see if it sounds as bad as I think it did. But you think after all these years of doing the show, I would not find a way to stick both feet in my mouth on purpose.
It was not that bad, Alex. I promise you.
Yeah. And also we can always be improving. It's like,
I knew what you were trying to say, and I know you, and you're one of the least sexist people I know. So
that's the nicest thing you've said to me. Thank you.
It's very true.
Well, we do have some questions, some very fun questions. One of the ones that I thought was particularly interesting, just because I've been thinking about this like pandemic correction a lot and trying to find nuance in that trend. What sectors are not yet too obviously impacted by pandemic correction, but are seeing some changes? So maybe the more like subtle pandemic correction that's happening to spaces that were not caught up in this boom bust that some of the more obvious companies we're seeing have experienced.
Well, I mean, just thinking out loud, I don't think there's a single answer to this question, so you can't say that. But I would say biotech seems to have been less boom busty in the last couple of years than certain other sectors, though that's going to be very variable on a per company basis. And then Marianne, ironically, slower growing SaaS seem to have less of a spike, and so it's had less of a decline since then, whereas high growth SaaS is much more variable. What do you got?
That makes sense. Yeah, SaaS came to mind as well in general. And, Fintech I don't know. I think it depends on what you're doing in Fintech. Like, I think parts of it, segments of it are going to be impacted. I'm definitely hearing of a slowdown, a lot more hesitation on the part of VCs and investors and backing startups in the space. Yeah. So I would say it's definitely not immune, even though it was like the darling of the venture capital of the world in 2021. I'm not saying that it's going to be again in 2022, but I do think it will still continue to attract a fair amount of venture dollars this year.
Yeah, I would throw in certain scenes are seeing less impact of what Natasha calls the re-correction or the correction to the correction, if you will. Europe, for example, has had a much stabler venture capital result, at least to start the year, than North America. That's so true. We're seeing geographic differentiation. And then as a last thing, I'll just say infra.
Oh my gosh. Yeah. I wrote about 2 infrastructure companies yesterday, and you've talked about this before. I mean, definitely infrastructure seems to be going strong still.
Yeah, that's strong everywhere. Sorry, Grace.
No. I also know that you wrote a piece about, I'm just thinking of the pieces that have come out recently about this. And you wrote one recently also about health tech, which I thought was interesting. And I'm curious to what the response of that space will be. I know it's kind of out of the scope of this question, but
Well, yes and no. So health tech is really broad, which is an issue we have with things like fintech. And, Marianne and I joke about this occasionally, that fintech just means stuff.
Right.
But inside of health tech, there's two spaces that I am tracking that are doing what we did expect. One of which was mental health services, or anything involving mental health via an app or a digital service. Venture volume has gone splat. And the other one that makes really good sense. Telehealth. Thank you. Yes, exactly that. Also going up and down. I mean, my therapist, for example, is like, we can do this in person now. And I'm like, I don't have time to go see your ass. You're a meeting that I have in the day.
Thankfully, most physicians, not all, but most are still offering virtual appointments, as long as like a person doesn't need to be physically examined. So that's like one thing that came out of the pandemic that I think was a blessing, and I hope sticks around. And part of the problem, though, I don't know if people realize with telehealth, though, is there were like a lot of laws that didn't allow for it. And, for years, like different people across the country were trying to push this legislation forward. The pandemic happened and it sped it through. I'm grateful for that. I think it's a great thing, and I hope it stays that way. So,
you know, what's interesting though, if you go back in time, we often see how industries and sectors that are less institutionalized end up pushing technology forward. The adult entertainment world was famous in the 90s for pushing the web forward in terms of payments and video streaming. I had a virtual visit with a doctor to get a medical card for cannabis in San Francisco like a million years ago. And it was great. And now everyone's like, telehealth's possible. I'm like, the weed kids figured this out way before the therapists. So
that's interesting.
Yeah. That's such an important, I mean, for both of those industries, such an important point, like bringing that history to the foreground, be like, there should be a little appreciation here.
Yeah.
A little bit of returning the favor. Yeah. Right.
To cheating your way to weed cards before it was easy to get drugs.
Exactly. That's what I'm looking for.
Oh my God.
There are a couple of other questions. One, has better impacted investor interest in prop tech? What are you hearing from investors about that?
That's a good question. And I think it's a little too early to say. I think investors are smart enough to know that better is, kind of an exceptional, and I don't mean that in a good way, company in its space. And that, yes, it was hammered by market conditions, just like Blend was, but it also had a lot of other things internally that have sort of contributed to its downfall. Prop tech in general has had its ups and downs, right? Like I'm seeing a lot of invested in a lot of tech enabled home building, for example. There's a lot of money going into that, things like 3D printing. But any like real estate or prop tech company that's dealt with anything tied to like mortgages or home buying is struggling right now. And that's just, part of market conditions, less inventory, housing shortage, higher interest rates, all of it. Certainly, I don't think Better's helping prop tech's case, but I wouldn't blame it for the woes that the sector might be experiencing right now.
So symptom, but not cause.
Yeah.
I think to that question's point, I think it creates a bad mouthfeel, but I think investors who are probably already watching interest rates rising and how that was impacting mortgage and refinance applications probably already kind of saw the writing on the wall.
Right.
So my question is just, again, how did people not expect that this very obvious thing was going to happen when people thought it was going to happen?
Right. Agreed.
One final question for us today. Congratulations on getting verified on Twitter.
Yeah, thank you.
I would all just love to take a moment to enjoy that.
I didn't even know we applied. I just woke up to that good news.
And the question is, what other tech journalists do you recommend that we follow?
I mean,
Alex Conrad is amazing.
I do love Conrad. Forbes. I mean, it's a list.
Oh yeah. Is that a list that should be published, should be out there?
Former tech crunchers, Katie Roof, Kate Clark.
Yeah, they're fantastic. I'll throw out some names of people that we just hired. So Jacqueline Melnick on the TechCrunch Plus crypto team. Tim Deschamps just joined on the climate side. Harry Weber, one of my longest friends, is now at TC covering climate. Really excited about them.
Yes. Kyle Wiggers is on their team now.
Kyle Wiggers just joined. We're hiring some other folks that I can't quite tell you about, but there are some names coming that I'm really excited about. Knock on wood that everything goes well with those hires. But I'll just be honest. Like, there's great reporters at The Block. There's great reporters at Insider. I've known people at Fortune and Forbes forever. Really, honestly, and I mean this with no BS, the technology covering world of people who have a startup focus in the media are all really smart and nice people. Like it's not the case in every bit of journalism. I'm not saying journalists are universally good,
right,
but like the folks that are doing this give a shit. They all tend to be pretty lovely.
Yeah. I mean, I would say it's a very healthy, I guess healthy competition, because there's a lot of respect, right, among all of us for each other. And so, there's just a ton of great journalists in this space.
Yeah.
And,
except for CNBC. Fuck those people. I'm kidding. That was just, it came out meaner than I meant it to. I love CNBC. Yeah. Jordan Novet's fantastic. I now have to like call everyone out.
Hugh
Matt
Son,
Rosoff is
name?
lovely. Hugh Son's lovely. Yeah. CNBC is great. I give them a hard time because they don't invite me on TV anymore.
Maybe this will be the chance. This will be the impetus.
Oh yeah, that's how you get back on CNBC. Just mock them on the Q&A section.
Cool.
No, yeah, everyone's good.
Well, let's go ahead and wrap it up, Alex. That was a great set of questions.
Yeah, an absolute pleasure. Thanks for coming out, everybody. We can't see you because we're in Zoom, which gets fed into Hopin. And if you're on Twitter Spaces, what up? But it's fun to do this. It's a challenge for us because we can't stop if we wanted to. We don't usually stop, but sometimes we'll take a break and retry something. But this time we have to be on our toes. So thank you for keeping us fit. Marianne, thank you for your time. Grace, thank you for producing. Julio, Yashad, Dennis, everyone behind the scenes, you're amazing. And we'll talk to you on Monday. Bye, everybody.
Thanks, everybody.